Hi, welcome back. Well, the big story that we will be tracking today is Facebook investing in Reliance Industries. Reliance Industries today said Facebook has announced an investment of $5.7 billion or 43,574 crore rupees in Jio for a 9.99% stake, making this the largest technology sector FDI in India. Sonia Shenoy is joining us to give us more details. Sonia?
Absolutely. Just to give you the details, as you rightly pointed out, Facebook will invest 43,574 crores in Reliance Jio platforms. Now, with this, they'll be buying 9.99% stake. So it's a total investment of $5.7 billion. It makes it the largest minority shareholder in the company. Now, this partnership is to create opportunities for people and for businesses. And this deal values the entire Jio platform at 4.62 lakh crores enterprise value. Now, this is the largest investment for a minority stake by a tech company in the world. This is the largest FDI in the technology sector in India. And with this investment values Jio platforms amongst the top 5 listed companies in India by market cap. Now, Reliance Retail and WhatsApp have also entered into an agreement to accelerate retail commerce businesses across Jio platforms. With this Jio Facebook partnership, it aims at providing work and opportunities to 60 million micro, small and medium businesses, 120 million farmers and 30 million small merchants. Now, this commercial partnership between Jio, Reliance Retail and WhatsApp is for Jio Mart. So WhatsApp will further Reliance Retail's new commerce platform, which is Jio Mart, as we know. It's targeting seamless Kirana transactions with Jio Mart using WhatsApp. So a really big deal in this space. Now, Mukesh Ambani says he welcomes Facebook as a long-term partner in the digital transformation business. He's confident of India's recovery in the post-corona era. The partnership with Facebook will make an important contribution to transformation. And Mark Zuckerberg says that Facebook is teaming up with Reliance Jio platforms, will work on some major projects that will open commerce opportunities in India, and India is in the middle of a major digital transformation. Now, I did get a chance to speak to a lot of analysts on what this really means. So remember, this implies a fresh equity issue. It's not a sale of shares. So the money goes directly into Reliance Jio to its platforms and not to Reliance Industries. Hence, this means there are more resources for Reliance Jio, less infusion is required by Reliance Industries, which is a positive. No money into Reliance Industries per se, just to Reliance Jio. Now, SBI Cap has put out a note where they say that the enterprise value of the business as well is broadly in line with estimates, and the deal will play a meaningful role in the mobile commerce space. Back to you.
Okay, Sonia, thanks a lot for giving us all those details. And Reliance did recover 7% from the day's low. Let's see how it reacts today. Of course, standard disclaimer that Reliance is the promoter of the channel that you're watching. But let's move on to the other sector. Cement maker ACC posted its Q1 results in which volumes missed projections. However, on the cost side, benefits led to a big beat on the operational front. Nigel joins us now with the fine print. Nigel, how do you view the results?
Well, the numbers look like a beat, basically. So on the top line, it came in at around 3,500 crores odd. We would like a number close to around 3,560 odd. The issue was that the volumes, that was a bigger miss in comparison to our estimates. So we were working with a number of around 6.85 million tons odd. It came in at a little below 6.6 million tons. So that was a bit of a disappointment there in terms of the volumes. However, the margins came in at more than 16%. We were working with a mild number of around 14.5% odd. So the margin beat was something that the street will like. Short point being that the cost benefits outweigh the volume mix. How does it happen? The raw material cost did come in lower. They source optimized, and also the supply chain management is something that did help them. Net profit number comes in at more than 320 crores odd. We were working with a number that was far lower than that. So ACC should do a relative outperformance today because the margin beat, and the second factor is valuations are supportive as the stock trades at nearly around 25% discount to its replacement cost. Back to you.
Okay, Nigel, thanks a lot for that. Let's see how ACC reacts today. Nigel says these are good numbers, but let's take a check on the commodities space then. Manisha Gupta joins us with all the update from the commodity markets. Hi, Manisha. Good morning.
Hi, morning. Well, we have seen the two most turbulent days in the history of crude, as in Monday and Tuesday. And today, again, we've started on a very choppy note. Some gains coming in back yet again. Yesterday wasn't such a great day because we almost saw 30 to 40% of a cut in the June WTI contract. We're trading in the positive onto that one right now. Well, the concerns are still there. You have seen a lot of deliveries now shift on to June. So the June delivery expiry would be a very important day to watch for. In the meanwhile, you also are looking at more reports coming in, more accurate reports being stated that the output for crude in the global markets right now is at around 90 to 95 million barrels per day, while the demand is at 75. So there is a huge mismatch. And there have been statements from the U.S. president saying that they will be allocating funds for the energy sector, energy companies in U.S. There also are statements from Saudi Arabia and Russia saying that they will be taking extra measures to ensure to curtail the further decline in prices. So while there are statements, we haven't seen much action on that on ground, and that is the reason the pressure in the crude prices will just about continue. The metal prices also have started Asia on a weaker note. The commodity currencies like Canadian dollar is trading at a 2-week low. So everything to do with commodities is on the weaker side, apart from gold, which is trading in the positive right now. Yesterday, we did see a 2-week lows, but the gold prices are back above $1,700 per ounce now. So some safe haven coming in for gold because of all of this uncertainty. But the other industrial commodities, almost all of them in Asia, are in the negative.
Okay, Manisha, thanks a lot for joining us and giving us all those details. Well, from commodities, let's switch to derivatives markets then. Mangalam joins in with cues from the F&O space. Mangalam?
Well, good morning. Yesterday we saw a big dip in the Nifty, the biggest that we've seen at least in the last 10 odd days, and the data did suggest the same, because there was a bit of a buyer's strike as far as the cash market volumes are concerned. The FIs sold around 2,100 odd crores. The domestic institutional investors too were sellers to the tune of around 67, 68 odd crores. In the futures space as well, the Nifty futures, which was at a premium of 45 points just 2 days back, went into a discount yesterday, and then that discount widened to about 10 points after the dip that we saw. That's telling you that the FIIs are selling in index futures. Close to around 1,100 crores worth sale coming in out there, and the FIIs added close to around 18,000 shorts. This compares with just 200 longs that they added in index futures. If you take a look at the individual index derivatives, you would notice that the Nifty Bank saw an open interest jump of almost 18% as against the Nifty, which saw a jump of around 1.5%. So that's telling you most of the shorts were added on the Nifty Bank itself. And with this, the FII positioning, which was 51% ahead of yesterday's trading session, has now gone back to 46% as far as the long positions are concerned. The put call ratio falling to 1.2 indicated that there was a fair amount of call writing, and that's what the data suggested as well. And call writers were pretty active at 9,000, 9,100 and 9,300. Where were the put writers active? At 8,700. So that's telling you that the 20-day moving average of 8,600 remains extremely important as far as the Nifty is concerned, because the SGX Nifty is indicating a downtick. Keep an eye out on a couple of stocks. The pharmaceutical stocks continue to see some long build-up, so Dr. Reddy's and Aurobindo Pharma. And finally, Reliance, we get the news this morning about Facebook's investment in Reliance Jio. 1,400 call yesterday was pretty active, so we'll keep an eye out on how that pans out. At the lower level, 1,200 put has the maximum open interest.
Okay, Mangalam, thanks a lot for that. But with that, it's curtains down on this edition of Power Breakfast. Bazaar Morning Call comes up next. Stay tuned to CNBC TV 18.